Today we are testing something that is completely new to Robinhood. That is Robinhood Strategies. So if you have any questions about what Robinhood Strategies is all about, how to get started with it, this is the video for you. We're going to walk through it all step by step from A to Z. And I think the best place to start is to understand what we are getting into and what this could potentially be. So essentially, this is like a robo-advisor, but in Robinhood's terms, it's better than that. And I guess as we dive through it, we'll see how and why it could be better than that. And I think with the way that technology and AI has advanced and is advancing, the potential here could be pretty cool. But then at the same time, I always think to myself, well, if everybody is using AI and if everyone's optimizing for the same things, then is that technically going to be counterintuitive? Like, will the market just work the same way if everyone is doing the same thing? You know what I'm saying? So it's like, I don't know. It's going to be I'm very excited to see what's to come of this in the entire industry, because it's going to be crazy, I think. And you may have situations where things that historically used to happen may not happen at the same frequency that they have in the past. I'm already starting to see some of that, but that's for a different video. Let's dive into it. As we get started, before we get started, there's a couple things we should be aware of going into it. If you have Robinhood Gold, you're going to get some perks in this. I pay for gold, so I guess I'm going to get some perks. But if you fund an account by June 30th, before this, I guess shortly after this video is coming out, you're going to get $1,000 managed without any fees if you have gold, and up to $500 managed without any fees if you have a free version or you don't pay for Robinhood Gold. And you're also going to get a 1% transfer boost through May 30th. If you can catch that, cool. If you can't, you can't. Up to $500 for gold members on a $50,000 deposit, up to $250 for non-gold members. Capped. Again, that's capped. That's the cap. You can't go more than $250, and you can't get more than $500 gold or not gold. It's going to apparently give you some cool timed market insights. Now, timing the market, we kind of know from past experience, like, that's interesting. So we'll see how that shakes out. And also, apparently, their team has over 50 years of experience through every bull and bear market to help comprehensively create a portfolio for you that's designed to fit your investment style and needs and your goals. So here's where they said they're much more than a robo-advisor. And really, it allows you to have some control, which is cool, because there's other platforms out there that'll be like, okay, you are high risk, medium risk, low risk, and then you have to just pick one of those categories, and then it just does it all for you. It's like, well, okay, I'm paying you a fee, and this is all I get. Like, I don't have a lot of say. So some people kind of want a blend of a little bit of say without too much say, and then let the advisor do the rest. And so this is Robinhood's solution to that. So I think it's interesting. How it ends up working out, we shall see. And it's something that I think I will follow over the course of at least a couple of years while I test this out on my own. They also mentioned tax advantages. So they strategically will choose some things to do which could potentially benefit you in terms of short-term versus long-term capital gains. And they'll give the opportunity to total up your gains and losses, so you maybe have the ability to harvest some tax or some losses come tax loss harvesting season. Let's say you get into a stock that goes down all year, and you're down 20%. Let's say you're down $100 on it, just to make it simple. You're down $100 on the stock, and you have other gains that you've locked in. Maybe you were in Nvidia, or you were in the S&P last year, and you locked in really nice gains on some of your positions. And so you're sitting on some really nice capital gains, whether it's short-term capital gains or long-term capital gains. You're sitting on some capital gains that you're going to have to pay taxes on. Well, now you could potentially, they'll give you the opportunity to say, hey, you want to harvest this loss, which would mean, oh, I was in, AMD, for example, and AMD was not doing great. And I'm going to take my $100, I'm going to realize my $100 loss, and now I can write that off against my gains. So now I'm paying less in taxes. So that's kind of cool. It's something people always do at the end of the year. And it could be very beneficial depending upon, really how much taxes you're going to have to pay and how much you could potentially write off with losses. And then is it worth exiting and then re-entering at the end or into the new year? That's something you have to decide for yourself, but it could be kind of cool. Okay. Here are the fees. This is where everyone is. This is where we should start. I mean, before we get into it all, because I think it's important. So basically, if you do not have a gold account, or if you do have a gold account, it's really irrelevant until you get over $100,000 in account value. Once you get over $100,000 in account value, that's where the fees start to drop off if you have gold. It's really irrelevant because the fees are about the same for anyone who is managing up to $100,000 with Robinhood on this strategies option or feature that they have. 0.25%, so it's capped at, for a 50K account, $125, and then $250 on a $100,000 account. And this is the annual management fee. It's not like a monthly, it's the annual management fee. The way that it does work is that with Robinhood Gold, you do not have to pay a management fee on any dollar that you have in this or any dollar in your account that's valued over $100,000. So that's why it drops off like that. It's just kind of proportional to the size of your account as you increase over $100,000. So you're not going to pay substantially more money, or you're not even substantially. You're not going to pay any more money than $250 per year, even if you have $1 million in your account on Robinhood Gold. So the percentage that the management fee becomes super, super small the more money you have, which kind of makes it cool. But if you don't have Robinhood Gold, well, then you're paying that 0.25% flat year over year over year over year, no matter what, no matter how large your account is. It's just what it is. So the incentives to kind of use Robinhood Gold, which is $5 a month, I would be surprised if that doesn't increase at some point in the near future, because they're continuing to add more and more features and more perks. But for now, it's $5 a month, and I think it's like $80 maybe, or $80 or $90 maybe, if you buy the yearly, so you can save some money yearly. But that's kind of like their way of like, okay, let's lock in your money now, lock in your money monthly, so we can guarantee this, versus maybe you pull your money out of this account, or maybe the markets are not that great, and there's not as much activity, and so they can't make as much money off of little fees and commissions and whatnot throughout the course of the year. So that's the reason why that they do that. So it makes sense, at least in my opinion. So apparently they have a bunch of investment professionals that are behind the scenes, which is kind of interesting. You do not get access to any individual advisor specifically. Now, it depends upon these fees. Like, everyone's going to have a different perspective of this. If you come from a background where you're like, I can do it all myself, well, then, you might look at these fees and go, I would never pay these fees. From you going from a background from someone who's maybe taken, 0.5% or 1%, of management fee, which is depending upon where you're coming from, these fees may be high or low. And I think that they offer some different potential benefits, or maybe some drawbacks too, that you may or may not like when it comes down to it all. But it's something to think about. In terms of a minimum investment, you have to have $50 in your account. If you have less than 500, they'll invest in a portfolio of ETFs. If you've got 500 or more, they might throw this into some ETFs and stocks. It just depends. Funding the account is just like how you would fund your Robinhood accounts like usual. In terms of the types of accounts, you can have a strategies account with, or kind of like this managed for you account, right? Which is what the strategies is. You can have that in an individual, an IRA, or traditional IRA, or a Roth IRA, and they give you abilities to restrict up to 3 individual stocks. So what I'm going to do is I have IRAs with other platforms, but to be honest with you, I'm going to go ahead and I'm going to fund an IRA account, my Roth IRA account, with $100 as an example, and we're going to walk through it all. You can have a total of 1 self-directed account and 1 Robinhood Strategies managed account for each of the different account types. So an individual account, an IRA, etc. So what you're going to do is you're going to go to your inside of your app as of right now. You're going to click on the person icon in the bottom right. You're going to get to a page that looks like this. Click on add an account. Here's where I'm going to go into a retirement account, Roth IRA, continue. And I already have a self-directed IRA, so I'm going to click on Managed by Robinhood Securities. Now we can walk through the process here. All right, so question 1, what is your main goal for this money you're investing in the account? Preserve my money, even if that means less growth. Balance preserving my money with growing it. Grow my money over time, even if it means potentially higher losses. I am 26 in a Roth IRA. Let's go to the bottom option there. Now, which type of investments are you most comfortable with for this account? All right, I am going to be something wrong. I think for this account, higher risk, not the highest, but that's kind of the view. When do you plan to retire? I don't know. Let's say 60. Maybe I already retired. 26. No. Let's say 60 years old. Ask you a bunch of personal questions like your yearly income, which obviously mine's $500,000 or more. So you fill that out, and then we get to the next step. Reviewing experience level, evaluating, assuming, blah, 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 blah. Your portfolio is ready. Let's get very simple. Very simple. With 34 years to invest before you retire, you should have time to ride out the market's ups and downs. I hope so. We're going to start you with mostly stocks. 95% stocks and 5% bonds is what they gave me based on my selections and my time horizon. We'll diversify your holdings across multiple categories. For example, growth stocks, Amazon, Salesforce, etc. Okay, here we go. Here's how it breaks down. U.S. stocks, 77%. Growth, quality, large cap, dividend stocks, a mixture of both. Let's click into this. Yeah, so we can see growth is 28, quality 17. And if I click into these, it gives me examples, but doesn't give me specifics. Okay, cool. International stocks, Europe, emerging markets, 5% in U.S. bonds, and less than 1% cash. We ain't holding any cash in this account. Really quick, by the way, I might as well just check this out. So there's an edit option at the top right. Here's where we can edit, and if I click on edit, it's going to just allow me to change my investor profile. So it's not like I can go in and individually edit these things necessarily, which I thought was interesting. If I go into the individual US stocks and click on edit again, it's the same thing. It'll go back to the investor profile and then allow me to edit like the big picture, nothing specific. One last step is fund your account. So just like that, I'm a gold member. So I won't pay a management fee on my first $1,000, and I can earn up to $500 on external account transfers. So here's where you can now transfer from cash that you have sitting in your other accounts. So for example, I can take money that maybe was in my IRA or money that was in my individual account, which I only have $7.26 available in that account right now. And I can use that to transfer, or I can just use the normal deposit method that I would usually use in my bank or with my bank, and I can set this up just like that. Now I can also increase the frequency. So if I want to do this deposit, for example, let's say an IRA, and I know, okay, $7,000 is my cap for the year on the IRA. I break down $7,000 and I break it up into, okay, that means I can invest X amount of dollars per month or X amount of dollars per week or every 2 weeks, and I can put that in and then have it automatically just doing that in the background, which is nice. I'd highly recommend that. And then it's going to take care of that money and put it where it's got to put it and manage it all for you. So it's kind of cool. It makes you sign or click through some of the agreements. And then once you click agree and continue, you, my friends, are ready to go. And Robinhood will now be managing your account. All right, so what's my honest take about this? As someone who, to be honest, I like managing my own money. I prefer to manage my own money. I probably would not really care to utilize something like this long term. I throw a few dollars at it, throw $100, maybe add this over time, a few bucks here and there, and see how it compares to me. It would be really good to see and compare in like two different IRAs, like how I manage my IRA versus how Robinhood or how a robo-advisor manages an IRA, and who does better over the course of 5, 10, 15, 25 years. I mean, it's an experiment to play with yourself. I mean, I don't know. Like, I have no idea what's going to happen. And ultimately, do I trust myself or do I trust AI or Robinhood's managers? Who do I trust more? And that's the game, or that's like the approach you kind of have to roll with. So personally, for me, based on how I look at things and how I have a very simplistic approach and a simplistic strategy to managing an investment portfolio long term, I probably wouldn't use it because I'd rather just save on the management fee and just do it myself, and pretty much ride the S&P with a couple of caveats, a couple of adjustments to that that I would do or that I would utilize, and that's it. But that's me. Everyone's different, and I think it definitely has a place. And if you have more money and the management fee becomes more and more minuscule, I mean, it's definitely not a bad idea from a fee perspective. The higher, or let's say as you get up into the $50,000 or $500,000 to $1 million+ dollars, I mean, the management fee is not big at all. So if you trust it, why not? I don't see what's wrong with it. If you have any other questions, comments, or thoughts, leave them down below. If you are looking for a video diving deeper into the Robinhood Legend platform, their more active trading platform, that video will be up on the screen right now. Thanks so much, guys, and I'll see you in the next one. Peace.